So moving on to our last interactive session of this expert symposium. Wow, time has gone by really quickly. We will look ahead and see what the future might bring for inclusive insurance regulation. And the moderator, again, is someone who probably doesn't need an introduction to any of you. Michael McCord is Managing Director of the MicroInsurance Center at Milliman, and he's one of the leading experts on inclusive insurance, as we all know. Michael probably spends more time abroad helping countries get inclusive insurance off the ground than he does in his hometown of Appleton, Wisconsin. And he's also collaborated on numerous occasions with the A2II, and we're very happy that you agreed to moderate this session.
Thank you all very much. Anka, that was very kind. Very kind. Anka, where's my panel? Indeed, my panel now is all of you. Can we move this out of the way? My panel is all of you. So it's not going to be me talking a lot. It's going to be you folks. There's such a tremendous amount of value here in terms of all of you that we want to have you helping us out as we think through some of the issues in the future. Now, yesterday, somebody said that people of my age, and I'm paraphrasing, of course, people of my age shouldn't be thinking about the future much or telling anybody else about the future. Who was that yesterday? Who was that? You should be proud. You should be proud of what you say. Okay, well now look, I'm here and you're over there this time. And my panel is the audience. Yeah. Okay, good. Good. So what we want to talk about are a number of things. I'm not going to do slides, so we can all just talk and have a good discussion. I want to talk about what's the world of insurance going to look like in 2030. Now, I was just back at my office for a few minutes last week, and we want to do some strategic planning, and my staff said, well, should we do this for 3 years, or 5 years, or 10 years? And I laughed, right? I can't do strategic planning even for 3 years. What I have in the third year is all just fantasy, right? And so now we're going to talk about 10 years, and 10 years into the future of insurance and inclusive insurance. Now, I think for us especially, we have to be taking a long view because, as we heard yesterday, things take time. Arup reminded us. Arup? Is he gone? Oh, no. Arup reminded us yesterday that we have to be patient. So I do think that we have to look long into the future. 10 years, I think, is going to be good for us to be thinking about some of these issues. Then we're going to talk about what are the greatest challenges that regulators face in getting to that future. As we've talked about, you can hinder that progress, you can stop that progress, or you can help and let it go forward. Let's talk about what the regulator's role is in helping us and what challenges you have in getting us to a future of insurance. And then, where I really want to go, the objective here at the 10th anniversary celebration of A2II, we don't want them all to just sit back and say, oh, wasn't that wonderful? We want them now to be challenged for the future. Are you sitting back saying, oh, isn't that wonderful? Are you? You enjoyed that last night. Now it's time to get to work again. So now, what should A2II be doing? Given this is where the world might be going, given these are the challenges that we have, what might be the role for A2II? And so, kind of finishing up there, and in this session, I don't want to do just a lot of blah, blah. You know, oh, we need capacity building. You know, we need concrete activities, strong ideas on where we need to go. with these points. So now, clearly, I've got a lot of work to do. So I'm going to take off my jacket. Feel free, too, if you'd like. I'm going to roll up my sleeves, because this is going to be a busy one. I can tell. Okay, so we talked about earlier, we talked about the Sustainable Development Goals and how important they are to insurance, or how important insurance is to meeting those goals. We were told yesterday that the word insurance actually shows up one time in the Sustainable Development Goals documents. One time. But it underpins so much more of all these components. Directly, I think there are 6. Indirectly, there are a number 5. But insurance is core. And one of the things that, those of you who know me, one of the things I've said for many years is that without good insurance, we can't have sustainable development. That's how important I think insurance is to sustainable development. And now we sit here in a position where we can help that move forward. We can help in a very core way the sustainable development in the countries that we're talking about. So I think that's really important. It's important to think about those sustainable development goals. I do think it's important for regulators to be considering that, because I think regulators, whatever regulator you are, need to be thinking on a national level. There needs to be a policy level discussion that supports those sustainability goals. I just want to reiterate the mission, the goal of, or the vision of A2II, just to create an underpinning of our discussion. That mission is what? Is there? No, that's a trick. It's a trick. What's the real vision? All right, Jonathan, excellent. Excellent job. Thank you. Thank you. I didn't hear that from any of the other A2II people. Okay. Okay, so let's just remember, okay? More poor and vulnerable people have access to and use affordable insurance appropriate to their needs. Okay, I want to talk a little bit about the future and where we might go. So I was reading this article by McKinsey, and they told a story, and I'm going to read you a story that has been a bit altered by me, but I'm going to read you a story. I want you to think about this as I read it, and we'll talk about it after. So this will be like, I don't know, like 5th grade again, where someone reads it and we all discuss it, okay? But I want to talk about it because I think it's shocking, actually, to me. And maybe it's because I'm over 50 years old. Maybe. But it's shocking to me, okay? Again, this is from McKinsey, adapted a bit by me. Welcome to the future of insurance as seen through the eyes of Hassan, a customer in the year 2030. His digital personal assistant orders him an autonomous vehicle for a meeting across town. Upon getting into the arriving car, so can you imagine just saying I want a car and it just shows up and it's not an Uber? So upon getting into the arriving car, Hassan decides he wants to drive today and moves the car into active mode. Active mode. He actually wants to drive the car himself. It's one of those things that old people like to do. I'm not going to forget. Hassan's personal assistant maps out a potential route and shares it with his mobility insurer. The mobility insurer immediately responds with an alternate route that has a much lower likelihood of accidents and auto damage, as well as the calculated adjustment to his monthly premium. Wow. Hassan's assistant notifies him that the mobility insurance premium will increase by 4% based on the route he selects and the volume and distribution of the cars on the road. It also alerts him that his life insurance policy, which is now priced on a pay-as-you-live basis, Whew. All the travel I do, I'd never be able to pay my insurance, will increase by 2% for this quarter because he's taking riskier roads. The additional amounts are automatically debited from his account. Is that shocking? Or is it just me? It's not shocking? Did I hear somebody not shocking? Somebody young, it must be. What kind of issues do these have? What kind of issues does this have for insurers? If we think about the capacity, the ability, the structure of insurance companies, what does this relate to insurers? How? Brandon, one of our 2 representatives from the insurance industry. How? What do insurers have to do to make this happen? Is this a shift for them, or is it?
Yeah.
Okay.
Well, so the math, I think, is relatively straight. It's complex, but straightforward. It's technology to do the math quicker in order to do all of those. I mean, you're talking about a lot of APIs to a lot of data protection issues. But then
Data protection issues, which are also regulatory issues.
Complexity for the customer to understand what exactly they were just charged for, because you've got numbers flying all over the place. To making sure that you're actually covered. I mean, but I think for insurers, it's going right to their weakest spot. Their strength is looking at the future and coming up with a price for it. The weakness generally now is technology, so it sounds like a lot of tech.
A lot of tech. Not a lot of human intervention, a lot of tech. Does that impact regulators?
Yeah, with no insurer, you don't need a regulator anymore.
Well, there we go. So, okay, we're just going to skip to the end. We're going to say that the role of A2II in the future will be just to phase out regulators, help them find new jobs and things like that. Okay, sorry. What else? Where are there issues related to regulation? So if you don't have an insurer, you don't need a regulator. But you've also got, Brandon mentioned, we've got consumer protection issues. What else do we have? What are the 2 main roles of insurance supervisors, at least today? Consumer protection and financial stability, okay? What does it say for financial stability? You've now got pricing being done automated based on actual usage, actual risk. When regulators assess products for approval in countries where they do that, one of the things that they're looking for to support the stability point, they look at what? They look at how the prices are calculated, right? This has just become way, way, way more complicated for regulators to be able to do that. Do you need to do that? Why? Because now the rate just changed because he decided to take this route instead of that route. Must become tech savvy.
Technology and integrate technology in how they supervise.
How they supervise and how they approve a product, but based on principles of how those prices are going to be calculated?
Yes.
So not necessarily the actual price, but the principles
And the technology will help them
and
do
the
that.
technology.
Yeah.
Okay. Okay, good. What about, we've got a life, non-life linkage, right? We've got a non-life product. It reprices, automatically reprices the life product. So there's a linkage there. Is that a problem for regulators? Yes. Why? Why is that a problem for regulators?
It's a problem because normally we separate life insurance from non-life insurance because life insurance is a long-term business and
Yep.
non-life insurance is a short-term business.
When we talk about short-term business, so if this is a long-term life product, then yes, that falls there. But we see from some of the work that IAIS has done, in the application paper, for example, right, we see that shorter-term life policies can actually be intermingled. So maybe how we think about or construct those products, or maybe how we think about the two products, the two type products, as we go forward. Okay, thank you. Now you've got an auto debit that's undefined until the person makes his or her decision where they're going. This is maybe a security issue for bank accounts. Okay, Brandon?
Yeah, I wanted to take back, I said the math would be okay, but I'm thinking about it now, the idea of surge pricing, where a correlated disaster then prices everybody out of the market immediately, and so the aftershock of the earthquake, I mean, there are all sorts of problems with what you just read.
Yeah, I was also concerned about how the pricing, in terms of financial inclusion, how it might be impacted. So let's say me and my next door neighbour both get in the car every morning and go to work. I work in the orphanage, which is in the slum district of town. My next door neighbour works for PwC. He's going to go right sort of on the main highway to the smart business district. Both of our insurance premiums on our cars are now being priced on the route we're taking, where we're going through. I'm presuming my insurance premium's now going to be significantly higher than his. And maybe I'm probably less affluent anyway as a result of my day job. So I feel I'm being negatively impacted again. And in the past, I feel the pooling mechanism of insurance might have helped to even maybe some of that out.
Mm-hmm. So there are the broader issues of inclusive insurance and penalizing those people. So an excellent point. Anybody else on that piece? I have another quick piece. Yeah, Tim.
Is nobody else troubled by not knowing what's behind the algorithms that did all of this spontaneous adjustment? And when we say we're going to arm supervisors with technology, well, is that technology going to magically be able to correct garbage in, garbage out algorithms?
Yeah. That was your point. He was responding to your point.
Of course, it goes without saying, at least in my head, in making that statement, that it requires for us to get the very smart people within the authority, to get people that that understand algorithms and understand tech, can model these things. That's what it will require, because how else would you be able to deal with an animal like that? And of course, that would come at an enormous cost. But you can't speak about technology in vacuum, assuming that we'll just go buy a package from a boutique technology store and then deploy it. No, I think for me it goes without saying that we would need the tech-savvy people inside.
Is it common that more tech-savvy people are in the regulator's office or in the private sector? How does the regulator keep up and make sure that it's not garbage in, garbage out? Or that it's not somehow cheating the clients?
Depending on its resources, there might always be a lag. In some jurisdictions, there might not be a lag, depending on their ability to attract and retain those resources. In some jurisdictions, of course, they might not be able to get it because it's an expensive resource, bar for them investing in that resource. It's the same. Currently, there's a scarcity of actuarial resources. Some jurisdictions are doing a marvelous job to invest in that resource and retain. Elias is at IRA because Commissioner Godfrey knows he can't afford to lose him because he's a bright young chap that must stay there. And therefore, I think, and it's the incentives that will drive this process too, because if players know, because we're financed by levies, so it requires for us to now generate all those resources to be able to get, what do you call people that read algorithms? Those smart people.
Yeah, those smart people. Yeah. Yeah.
Yeah, but I think the notion that the regulator will just sit and not arm himself, it might take some time. But once we are faced...
This is actually a point we're going to get to, is what is the role of the regulator in keeping up or in slowing down growth and expansion? How long does it take to get those people and such? Elias, in Kenya, you've had... Yeah, thanks. I thought I was loud enough. Sorry. No. In Kenya, you've done a lot. You've talked about a lot of the technology effort that you've made. Do you have people that can do this kind of analysis of algorithms and such?
I think it depends, and it will take time. For instance, when you're talking about big data, machine learning, there must be a background that basically, as you create that particular data set, that particular data set will be able to enable you run the algorithm. So I think the most important thing is talk about becoming regulator 3.0, because when we talk about personal assistance, we are talking about Web 3.0, whereby everything is assisted. So we need also to have regulator 3.0, whereby each and everything is about how do we generate, how do we share, and how do we build that particular information. So it will be more about collecting these particular data points, and over time, the algorithms will become even better. So for instance, on the first data set, we might not be able to get the real data, and it requires a lot of building. Also, we need to think about things like SupTech, RegTech, and in Kenya, in fact, within the strategic plan, we are going to provide a guidance note on RegTech. So how then do we enable the providers and the technology people to understand what RegTech is all about? So it will require time and resources that has to be put in place. And you might not get it on the first day that the algorithms are working perfectly, but as you build the data set, the data will never lie if you have enough data set. So are we generating enough data points to give us the real information on that? And also we need to collaborate. So for instance, you need to get, if it's driving through the highways, you need to get data from the highway authority that is being plugged into your system. You need to get data from the police to know the number of accidents within that particular region. So it's all about collaborating and getting all these data sets together. But we need to get regulators becoming regulator 3.0.
Regulator 3.0, I like that. I like that. And it's getting to be time. What if Hassan's brother, who lives in Germany, bought the policy for him in Kenya? He bought the policy out of Germany for his brother to be covered in Kenya. Is that an issue? Craig.
Yes, I was thinking about this before, because the digital personal assistant is going to be one of 6 in the world, presumably, with economies of scale.
Yep.
And I imagine that the digital personal assistant and the insurance operation are integrated, so the insurance has actually been bought somewhere else altogether, which raises that question about how the money gets transferred and everything like that. But it could be totally bundled and horrible pricing and nothing to do with where the insurer is actually located. So maybe most of us don't have to become Tech 3.0 supervisors. Maybe only one does.
Maybe only one does. Because now in a
zero.
sense, we're back to this position that we mentioned before, Maria, about not having insurance in this country. Claims are paid in the country. The rest of the insurance is outside. And all this stuff is technical. What about the fact that the data itself is probably not hovering over Kenya somewhere, in some cloud over Kenya? It's hovering over somewhere in India, maybe, right? Is there a regulatory issue there? Yeah. Do these matter? Does it matter if the data is hovering in a cloud over India? If the insurance company is based in the Netherlands? Depends on the regulation. Outside the regulation, does it matter? I mean, yes, you have to follow the regulation, but regulations also have to evolve too, right? I mean, are we agreed there? Yeah. And we have to ask questions. Is this necessary? This is so much of what we do in microinsurance in general, right? We look at people's processes, we look at the way they work, and we try to make them more efficient and more effective. Do we still need that? Do we still need 5 signatures on a claim for $200? So yeah, the regulation may say that, but let's think about, is this necessary? Is this necessary?
I think that the most important thing is that is to ask if the insurer is able to have access at any time to the data, even if the data are located abroad, and if even if the data are located abroad, they must have the protection in order not to be even I want to say stolen by someone, and this is I think the most important thing, because if you want the data to be localized on your country, maybe you will not offer the appropriate protection, and those data will be stolen by someone, and you will not be able to offer the protection the client needs. So it's not a question of localization, it's a question of accessibility and protection.
So accessibility and security of the data, but there are ways that you can prove that, right? One of the things that we say in microinsurance, when we talk about life insurance policies, right? Every insurance company out there, when they have a life insurance policy, they want to see a death certificate to prove that the event occurred, right? Oftentimes it's the regulator that makes them do that, right? But that's not really what needs to happen. What needs to happen is that we just have to prove that the event occurred. We have to prove that there is that security. We have to prove that there is that access. So if we start to think about this in a little bit of a different way, I think this creates a number of opportunities. Somebody else? How does this relate to the low-income market? We heard a little bit from Hannah before, talking about automatic cars and all that stuff. How does this relate to the low-income market? Yeah, Martina.
Yeah, listening to this discussion, I was just getting concerned about the 9 brothers and sisters of Hassan who live in rural areas in one of the markets which are very quickly growing in Africa, like Nigeria or Ghana, countries which will double their population in the next 30 years. So what about those? Will they be all excluded because they have no access to the internet?
Yeah.
So the digital gap will be much bigger.
Exactly.
Digital divide.
Is this possible? We've talked about the, what did we call it? The coverage gap. Are we potentially moving into a situation where the coverage gap is expanded rather than reduced because so much focus is on all these fancy technological issues? Is that possible? Or is it just me? Yeah, Tim.
No, I think it's possible, and it's not just because we're focused on all these fancy technology issues. It's because the data and advanced data analytics are inadvertently attacking the very notion of risk pooling, because they're just simply deciding not to offer to somebody who presents, or pricing at a point that no one can afford.
And like Hannah said, once we're looking at every step you take, then lower income people often are riskier. And so it's going to bring that price up to a point that people can't afford. Yeah. Somebody else? I would think there'd be a lot of concerns in this room about what this world is looking like. And I think, although it seems to me like science fiction, I don't think it's that far off. A world like this, I think it's important for us to really be thinking about this. I think there is big potential for expanding the coverage gap. Lemmy.
I think one of the points that came out in our group was the over-focus on technology. I think technology should be used for a specific purpose, and there has to be a need. I think we won't get to a point where every distribution solution that we need, it has to be technology. I think the case is Pioneer, for instance. I mean, they grew without technology. It's now that they're trying to focus on technology. So if we stay connected to the real purpose of inclusive insurance, which is really looking at the people in remote areas and so on. Yes, technology could be an enabler, but I think we shouldn't get to a point where it becomes the means and end. I think it has to be used strategically to solve a problem, but I think if you try to over-focus on it, it might actually create a gap. In short.
So the act of over-focusing on technology might create a gap.
Yeah.
So who's going to hold people to account to make sure that we're not just forgetting them? Because it sure is kind of cool to do this insurance where you don't even have to do anything, right? What's the real cost to the insurer to managing this account? It's all automated machine learning and stuff, right? Not a lot of cost other than initial costs. So why wouldn't insurers focus there? What's going to happen to force, to push, to incentivize insurers to focus on that? Yeah, let me.
I think definitely I might not have a comprehensive answer to that, but I think one of the things for me, I think we talk about this normally when we talk about this issue. I think there are very few insurers that really stay focused to the inclusive agenda. And we hope by having demonstration cases and also trying to demonstrate to the rest, we can grow a few more. I think the more we have, insurers that are driven by inclusivity because they believe there's a business case, I think the more we're going to do it. But of course, we're in the room full of regulators. I think one of the things that struck me yesterday for me is, what are the measures for regulators? Because I think the more regulators begin to think about how they can be accountable as well to drive inclusive insurance, then they will actually propel the markets as well.
How they can be working to propel the inclusive markets. But when we talked yesterday and this morning, we talked about the role of insurers as being market developers. That doesn't necessarily mean the low-income market. It doesn't necessarily mean the inclusive market, right? Jonathan, and then I'll come back, Henny.
Yeah, I guess one to the question, what does it mean? I do think it probably means much starker public policy questions. So probably more information is not necessarily a bad thing. I think from a supervisory perspective, more accurate risk pricing is generally a good thing. But the question then is, what happens if the more accurate risk pricing leads to exclusion of people because of the higher prices? And I think that then leads to some very fundamental questions about public-private partnerships in still being able to cover the social costs of protecting lower-income populations.
This morning we had a bit of a discussion about data and data collection, and it was deemed generally that this is a challenge, and the conclusion in the plenary at least was that we should be focusing only on very simple data. We're going to need more data if we're going to determine who on the income levels is getting serviced, what's stopping them. Yeah, Henny. Thank you, Jonathan.
Michael, yeah, no, you're suitably controversial, I think, and correctly so. If I can perhaps disintegrate three things that I see in your scenario that are happening, and we see it in other digital world. The first thing is that regulators and supervisors normally try and control decision making. And what's happening in this scenario is that the traditional agents of decision making are changing. They're no longer human beings, a certified actuary, a board of directors. They are different agents, people who write algorithms, the algorithms themselves. And if supervisors and regulators want to stay relevant, they need to be able to examine and certify, for the sake of customers, the decision-making made by machines. So these new digital agents and the decision-making will lead to a new set of agents that have to be supervised. It's a very interesting challenge. Mm-hmm. The second thing I think that's coming out is that since A2I started 10 years ago, we've seen the deconstruction of the distribution channel. What you are speaking about is the deconstruction of underwriting itself, where you don't only have to control the actuary, you now have to control the data and the systems and a host of other places that are happening. And that, so risk pooling itself is going to come under attack. And that could be highly exclusionary. The more automated we know things are, the more exclusionary they become. It's a rule one tends to see in poverty studies. But the third one is perhaps for people like A2I and IA is the most potent, and that is the fundamental undermining of the nation state. Because what you're speaking about is essentially where tax revenue goes offshore. We've recently done a piece of work in Mexico on digital e-commerce platforms for the biggest bank. 20% of the transactions on that platform was already for digital platforms, and 98% of those transactions were with offshore platforms, not Mexican platforms. Supervisors in Mexico aren't even aware that the economy is externalizing. If that happens, you will unleash a new set of tensions in a body like the IIS, where the few jurisdictions that have the capacity to understand what's going on could generate more revenue for their countries at the cost of the bulk of nation states who will not have that capacity. So the political tensions that will build up in organizations like the one we're sitting in, that scenario comes through, it's not insignificant. And I think one has to look at it at all of those levels as they play out. But it's nothing short of a total deconstruction of the regulatory and the supervisory function that is presented by something like this. And it's going to challenge us because the nation state is no longer a sovereign entity that controls what happens within its borders.
Okay. Excellent. Thank you, Henny. Excellent. Jonathan?
So I just wanted to challenge somewhat Henny's statement there, particularly the one around what it means for governance, because I don't think it will mean a situation whereby the boards of insurers are still no longer the persons who are held accountable. Yes, there will be algorithms, but in a sense, the actuarial judgments are in many ways also a black box that rely to some extent on judgment and subjectivity. I challenge the conclusion that the regulator would become the first line of defense in looking at algorithms. I think the first line of defense will continue to be the internal risk management and governance within insurers and ultimately the board that have to take responsibility for making sure that the algorithms that are being used are in compliance with what I believe are principles that will develop around fair use of data and algorithms. And in fact, you know, I think this is a real challenge for boards, and perhaps even more so than regulators, because I do see more of a move towards let's say a sort of a principles-based treating customers fairly type approach that says, well, you know, it's getting too complicated to get into the specifics of how individual decisions are made. We are going to have to rely on an approach that says these are, you know, inviolable principles that every board should be looking to, and it is their job to make sure that happens. And the regulator's job will be to check whether they are doing their job properly, as opposed to, I think, the regulator or the supervisor being the primary person who's trying to dig into how algorithms work in practice. So that would be the one point. The other one is, I do think it's a fair point about the fact that this is going to mean that the trend of globalization of insurance business continues, if not accelerates. Probably good news for an organization like the IIS, which is around global coordination and getting supervisors around the world to come together collectively to deal with supervision in a sort of collaborative cross-border sense.
So, Jonathan, in a sense, is this more a greater intensification of proportionality and putting that on the boards and being overseen for confirmation by the regulator?
I do think it means that any sort of compliance, rules-based approach to supervision is going to be increasingly unworkable, and that a move to a more and I shouldn't actually say principles-based, because sometimes that gets confused with a light touch approach. Let's call it an outcomes-based approach to regulation and supervision.
Okay, outcomes-based. Okay, Yoshi.
Just reviewing what you have said is a future scenario. You know, this automobile company completely at sort of one device of the automobile is insurance. They push a button and the rate is calculated. So this kind of world is created. It's quite likely to happen, right, in the future. First of all, automobile industry is much more sort of concentrated than insurance industry. So it's a little bit like GAFA's story, So it's possible that the companies, insurance companies, are more and more concentrated, consolidated, like international active players, limited number of active players. That's quite feasible. And they are 100%, for example, Volkswagen is Allianz 100% insurance, and other companies the same, right? So it's quite, how do you say, consolidated, concentrated market would happen. And one concern, regulatory concern, and your cloud example, if those situation happens, quite likely to happen, they have a cloud that they all concentrate information, some cloud. And if it does not work, dysfunction is a huge systemic concern. So that's a huge risk.
It's a concentration
risk. And also power structure-wise, automobile definitely is the first front selling automobile. Automatically insurance is attached. So insurance company is definitely under the automobile sort of company's structure, like subsidiary and so on. So what would happen? So insurance is to some extent one device of automobile, right? And of course we have a technical expertise and so on. So then what's the role of insurance regulators? Definitely we have to work with automobile company in accordance with automobile insurance and so on. So whole regulatory structure should be completely changed. We cannot work independently. We have to work with automobile industry or whatever. So that's a kind of very, very, different world. And as we discussed, globalization, definitely, like, Volkswagen operate around the world, and whole the Volkswagen is Allianz product, right? So then it have to be coordinated very much globally, So that's a kind of world in accordance with your scenario, how our industry, insurance industry and regulatory system could change.
And therefore having dramatic impacts on regulation. Okay, thank you. Okay, one more, and then I talk about something else.
Okay, I just want to add that with respect to digitizing and technology, as long as insurance development is concerned in the future, I just feel it's worth noting that with respect to inclusive insurance, all low-income earners across the world do not have the same appreciation as long as insurance is concerned. So if, as insurance practitioners, we are driving technology in terms of increasing coverage for insurance without looking at the fact that we need to increase education, insurance awareness for the low-income earners, especially in Africa. For the case of Ghana, my country, for instance, most low-income earners are not just low-income earners, but, excuse me to say, also have little literacy about insurance. So driving insurance and making it more sophisticated in terms of technology. People in Ghana, I know, do not appreciate insurance because it's quite scary for them. They just hear the word insurance and they get scared. Claims, they are coming for our money, they won't give us claims. They lack appreciation of insurance. The good thing is, for my country, Ghana, we have started the free SHS policy, which targets every adult of school-going age to be able to have access to free second cycle education. It is good. What I hope and pray for in the future is the fact that the government will look at the fact that insurance is the way to go, and then will put insurance as part of the educational curriculum across all levels of education to bring up the insurance awareness. And when that happens, people will now have a very good appreciation of insurance. And when insurance becomes more sophisticated, they will be able to still appreciate it and hang on to it. But if we don't do the literacy education and just take education, insurance so high, technology, you need certain internet data to be able to get insurance, you need to be on a certain platform, buy online, it's going to make the low-income earners in, let me say, my country very vulnerable and more difficult to actually buy insurance and appreciate insurance.
So insurance education becomes a core to the knowledge of the market, but also it sounds like insurance education can, at least at some level, assist regulation, assist in making sure that things are done fairly. If there's a mechanism for them to go to, if they understand how it's supposed to work, and it doesn't work that way, and then they have somewhere to go. So not only do they have the information, but they have a means of recourse. Yes. Is that?
Yes.
Yeah.
Sometimes from the working with the regulator, sometimes people come to complain about claims. We actually have Claim Settlement Bureau in the National Insurance Commission that intermediates between clients and insurance companies for fair payment of claims. Sometimes some people try to claim for events that are not claimable, and all this boils down to the fact that they just buy the insurance. They don't even know what is covered and what is not covered. All they know is that I have insurance. When this happens, they are supposed to pay. Meanwhile, every policy has exclusions. So if we are able to educate people more on insurance, then they know that not all risks are covered by every insurance policies. Then it also makes regulation more easier because the number of people that would have come to report unclaimable claims would have reduced.
Yep. Okay. So education as an important component. Is education the role or a role of the regulator in their market development responsibilities? Market education, is that a role for regulators? I hear yes.
Once
I hear
again.
yes. Yes?
Yes.
Okay. Okay, good. Now, I don't want to leave you with the thought that technology is the only disruptor of insurance and the only concern that regulators need to have, right? We have major other issues. We have global climate change and the issues that that brings us with recurrent, stronger, more severe or less severe storms. We have lots of additional issues that will impact the insurance industry and therefore regulators, how we track, how we monitor and manage those. We have lots of issues around that we've talked about over the last couple days around human resources. How do we get those people who can read the algorithms and understand what's there or set the principles or the fundamental policies by which we work? We've got interrelations with other regulators. I keep hearing that over and over again. Even me, I go and I talk to the insurance regulators, but in many places where we work, it's the insurance regulator, it's the banking regulator, it's the communications regulator, it may be the agriculture minister, right? All these people are coming together. I think this is something that we really have to think about also. How do we create better interlinkages between the different regulators? And this becomes hard because you have areas of strong people who don't want to lose their power, but at the same time, when all these regulators are siloed, it becomes extremely difficult to make changes, to do things that really have a broad impact. And that's what we're trying to do, and that's where a lot of the world is moving to, a place where it's not just the insurer, it's the auto, the SEC maybe, right? And the insurers and others. And I think this is really important. We need to think about proportionality. We need to think about the structure of regulators. Who's doing what? I think that in 10 years we're going to see a rather different organizational chart for regulators. Different people, different skill sets, different responsibilities. So what I want to do now is take a little time and think about, given those issues that we've discussed for almost the last hour, given those issues, where does A2II fit in? What's the role of A2II going forward? Brandon, can you help me? Sure. No, it's bigger. It's bigger than that. Sure. You don't need a microphone.
I know, I'm handing it off to somebody else now.
He's not going to say anything.
Okay.
I need you to take one of those and write down some things. Okay?
You picked the wrong guy.
Yeah, it's okay. I knew you'd volunteer. Okay, so now, given these issues that we've discussed, right, we can see where there are gaps in regulatory capacity, in regulatory structure. You can just bring that right out. Stand in the middle. This is your moment of fame. Come on. Yeah, you got to work. Yeah, there you go. There you go. All right. We do. Yeah. Okay. Okay, so I want to think about the next 10 years. Let's give them some work so that they're not just happy about the 10 years that they've had already, the tremendous work that they've done, but where should they be going? Where should A2II be going? And you folks, many of you, are the market for A2II. given these things that we've talked about, what kinds of things should A2II be focused on going forward?
I think the first point is to avoid exclusion. This is a key point.
To avoid exclusion, what does that mean?
To avoid this group of people to be excluded, because we talk about the use of technology to promote insurance, but maybe those who have no access to technology, what's happened to them? So we are in a room that we have different insurance supervisors from different parts of the world. And if you see, when we discuss, for instance, we have a breakout session, it's possible to see the difference between the different needs of the regulations. So it's, there are issues that are specific for some regulations, some supervisors that they don't fit for the other regulators. So it's not the needs for regulation are not the same. Mm-hmm. Because the markets are different. I think we need to avoid the exclusion of those who have not. Again, coming back to what you said, I think when we think about the use of technology, you need to avoid, as a first topic, not just this, but you need to avoid the exclusion of those that need protection.
So how can A2II do that? What should A2II do to make that happen?
Actually,
Anna is very strong, but her moral suasion may not do it. It may take more than that.
Well,
what should A2II do to help not allow the coverage gap to expand, but help it to decrease, even in the midst of all this change that we're talking about?
I think A2II should have more closer interaction with the regulators. They perhaps can agree with the 3 years the roadmap or something like that for the with the regulators, and then maybe more information coming from the regulators to the A2II. I think as far as my body is concerned, we will have no issue in reporting to in giving certain information about to A2II. So I think there need to be more collaboration between the regulators and to AI.
So there may giving more information to A2II may help in understanding what's happening in Pakistan or anywhere else, right? So when you're giving information, they're giving information, how does that get you to actually do whatever it takes that gets this coverage gap reduced? How does that effort get you to make changes? Or what effort does it take? I'm trying to be real specific here to try to figure out what kinds of things A2II should be doing to make this happen.
I've got one, Michael. May I?
You? Oh.
I've got a microphone and the pen. Paris. Yeah, well, I know, but a Paris Accord for inclusion.
A Paris Accord for inclusion.
I mean, you get to write your own what you're going to do, but somebody else is going to help you track it.
Okay, good. I'll write that down. Okay. A Paris Accord for inclusion. Yeah. Do we like this? The Frankfurt Accord? Yeah, we could do it right now. Yeah. Paris Accord or, yeah. Good.
Will insurance feature in inclusion? You are talking of Paris Accord for financial inclusion. Will insurance be part of that?
Yes, insurance.
Oh, okay. But then the question is, will the U.S. sign it and then back out? Okay. Okay. Somebody else. Martina.
Well, I have a more down-to-earth proposal, and maybe it has to do with a personal knowledge gap I have. But I think A2I should identify critical knowledge gap for maybe today or next year, and not what we may have in 10 years. And today I see a knowledge gap in understanding creating a dedicated license, because I see quite a number of countries still dreaming of the Philippine models that a dedicated microinsurance license will flow, and I haven't seen another country apart from the Philippines where it really flows. It has been tried in a number of countries, and a number of countries are dreaming of it and trying it, but it's not well researched and understood. When does it work, under which circumstances, and is it really a doable pathway?
So further understanding of, does this work, does this not? Maybe some case studies where it's been tried for success or not. So maybe more of a research component
and
in
then,
that way.
And then coupled with that, I have...
So let me just say, the other point that you bring up, which I think is really important, is a sequencing point, right? We don't need to go for 10 years now. We need to see that there. We need to build on things to get there, but we need to be addressing things in the short and medium term also, but with an eye on this longer term issue. Yeah.
And another point I experience when I speak to supervisors and work with them, those who were perhaps never in that round, they have a lot of material on the website. They know it's maybe existing and written there, and I'm guilty of writing some of these knowledge material, but I don't read it, I don't find it, I don't go deep into it, so they need kind of coaching and hand-holding to go deeper in it, and if they don't have that, they just copy sometimes regulations from other countries, because they don't know where to go. I was coaching 2 supervisors in the MicroInsurance master now, giving 30 hours of work to one supervisory authority. And the knowledge jump they made while they could call me every week an hour was really tremendous. But after 30 hours, it's over. And I have an assumption that if you give a voucher of 50 hours coaching time for a supervisor, they can make a big step forward in their efforts to draft regulation,
so we've
for
got
example.
all these documents that we've written, we've got all these things that we've done, we've got trainings that we do, but what seems to be lacking or maybe limited is the follow-up. How do we follow up on those so that then you can create that value? So you say just providing mentorship for 30 hours created a strong impact in the jurisdiction where the person you were with was working.
And 10 more questions for them, and then I drop out.
So, okay. Craig, I'll come back to you in just a second.
I just want to build on what Martina said. I think that the knowledge gap is coming sometimes from the fact that there are some new trends on the market, and it's necessary to identify those new trends. And before talking about knowledge gap, I would suggest maybe for EIS to be, or for A2I to work on identifying on the market the new trends in order to see if we have in the supervision sector the technologies in order to be able to tackle those new trends. And identifying the new trend will enable us to look for the new skills, the new smart guys who will be able to tackle those new challenges.
So how does A2II know what those new trends are going to be so that then they can help regulators be prepared for them to come rather than delaying potentially the market? How do they know where to look so that they can provide you the assistance before you need it?
I think that we talk in our panel about sandbox. I think that looking at what is happening in all the sandbox in different markets will give A2I some clear ideas of what's going on the market, and it will enable to share this kind of experience between the regulators.
So the resources at A2II are limited. They need to become more sustainable over time. There are loads of jurisdictions across the globe. Some of them have sandboxes or test and learn methods that they can move forward with limited resources. Should A2II be working with those who already have the sandboxes or the test and learn? Should they be working with those who aren't there yet? Should they be the conduit for information from the test and learns to the others?
I don't have a definite idea on the subject, but the first thing is that those who have got already sandbox can report quarterly, for example, to ATI to say what's happening, how the project is doing well or bad, and from this some lesson can be drawn, and those lessons can be shared among the other regulators.
So maybe this is another place where we come back to Brandon's Paris Accord. Right?
Okay.
Maybe there's a periodic, not a quarterly, but a periodic meeting, everyone comes together, you share the lessons, very well structured, something around that. Antonis. Antonis has got the MEFIN program, and he's brought together jurisdictions from around Asia. And in this way, right, you have relatively frequent meetings. I'm not going to ask him a question, I'm just going to say it. So yes, relatively frequent meetings, trying to share experiences from one jurisdiction to the other. And so maybe this is a model maybe that we could think about. Okay.
Right. Here.
Oh. Craig was next. He's been waiting
very patiently. I am so patient. So it wasn't linked to the technology discussions, but much more along the lines of Martina, who sort of pinpointed a particular issue. I want to make it a little bit broader and sort of back to the session this morning around impact, not client impact, but impact of regulations, and really looking at, I think Hannah said something like 24 different countries have regulations around inclusive insurance, microinsurance. How do we know if any of them are good? And so I do think that we do need to, you said there was 24 that were in pipeline, right? As well, something like that? I don't know if I get my numbers close, somewhere around there. Oh, I
want numbers, but 48 in total,
24. Exactly what I said. I was paying attention. Patient and attentive.
Critical skill.
So I do think, as these another 24 are coming online, we better quick look at the first 24 and see whether they worked or didn't work, and advise the next 24 so that they don't make the same mistakes that have been made, or that they can build on the successes. But again, just reiterating back to this copy-paste question, that it really depends on the stage of market development. So what works in one country is not necessarily going to work in another country. So it's really understanding why things did work or didn't work, why it made sense in the Philippines to focus on formalization, on having a special category, where that may not make the right approach in other countries.
So, Craig Thorburn, I'll come back to you, Henny. First I've got Elias, then Jackie. Okay. No, Henny. Yeah. I'll get to Henny after Elias. But I want to get Craig for a second. The World Bank has a peer review of donors. He's like, he got used to it. But they don't do that anymore. Why not? Because maybe that would be some kind of a model. Yeah, sorry.
We stopped actually quite a long time ago because it was incredibly labor intensive at a time when I think the staffing for financial market development was at its peak. And now who would actually go around and spend days and days and days in another agency when they can't even put their own book for it?
Right, okay, good. So that's a lesson we can learn and move forward from, okay? But maybe there is a way that something can be created that creates the ability to do that kind of assessment. Is that fair, Craig?
So I think what you're talking about is more on the capacity building bit that Martina was talking about, the mentorship. What I'm looking at is an assessment of which of the sort of regulatory pieces affected changes in the market. So I think going and doing the peer assessment is much more about sort of policy rather than what's happening on the ground in those markets.
So this is much more.
But I like the idea of the mentorship that you're proposing, and thinking about how countries that have had successful regulations, how could they facilitating sort of south-south exchanges, so it doesn't have to go up to A2II and then back down again, but more bilaterally is a really good idea.
But the relationships facilitated and create. Yeah. Okay. Elias, now you've been very patient. Thank you.
Right. Do we still need more papers for the inclusive insurance? I think we already have enough papers on this. We already have enough research done on this. And essentially, if you go to the internet, a lot of things have been done around inclusive insurance. So I don't see the need of us still going back into generating more papers around it. What we need to do is that what is the biggest threat for inclusive insurance is things like peer-to-peer. And what do these people need? Apparently, these people still have the people that we are trying to insure, they have some form of insurance. So what we need to do is how then do we formalize? Do we require a system that these people can now plug in and kind of have a proper managed process around insurance? Because already in Kenya, those people that are not having microinsurance, they have some form of protection that they do. Apparently, we call it chamas in Kenya. It's already existing. And there's no need of, again, writing a paper about it. We just need to look at, if, for instance, in Kenya, we get a system whereby we can plug all these people in, they'll be able to know what risks they're bringing together, they understand the process, then we are done. Because if we are still going back into developing papers, then we'll still go through the cycle. So I think we need to come up with a system. How do we onboard all these people that have been having some form of insurance that is not formalized?
So maybe we look at how we onboard that. And I know there are jurisdictions that have looked at those issues. Maybe we don't need to write another paper on that, but there does need to be more research on a number of issues that we've talked about. How do we convey effectively that information without paper? So one of the things, I mean, this concerns me too, because I'm probably as guilty as Martina, writing all kinds of papers and all that stuff. Yeah. And people don't come to a point where they need that information today necessarily. But we have to find a way that we can help them so that when they do need it, that's when they look at it, that's when they get it. Maybe that's when there's a different kind of linkage. You tell me.
Yeah, so I think we need to look at what are the current customers having. How do we formalize that particular process? Do we need to think of like a Lloyd syndicate kind of an idea around microinsurance, whereby there are so many small people that are small groups that are trying to protect themselves against particular risks?
This is one particular issue, right?
Yeah.
If we think about more broadly, how do we share information? Because you may have a solution or you may have an issue in Kenya, but maybe in Uganda, they could learn from that. So there has to be some means of conveying that back and forth, right? You can share your lessons.
No, they'll still have a way of getting it.
Okay.
They'll still have a way of getting to that information. The thing is that already even in Uganda, for example, they still have some risk protection mechanism that they still have. How do we ensure that this particular protection that they are still having can be in a form of a Lloyd syndicate, whereby these small groups that are trying to protect themselves against particular risks can be formalized and protect themselves even to bigger risks, more of a modernized peer-to-peer, because I think that is where the biggest risk will be on inclusive insurance, because they still have some form of protection.
Okay. Henny.
Michael, I think we need an iconoclastic view as well. It's strange coming from me, but let's just consider that there's a scenario where if we gather in 5 years from now, inclusive insurance has nothing to do with the activities of A2II. And you have a scenario where the urgency of capacity development for supervisors becomes so great across the entire stretch that the IIS and the Governing Council agree, let's focus on broad-based capacity building and not just inclusive insurance. And I think we've got to be open to that scenario.
There was a thank you from Namibia, I think. I think here, and then here, and then there.
Yeah.
Oh,
I have
Andrea
a
after.
naive question, maybe linked to the fact that I'm not very familiar with the Access to Insurance initiative, but we've been talking the last 2 days pretty much, very rightly in my sense, on the fact that now inclusive insurance is really part of financial inclusion, the concept as such. But there are other initiatives regarding financial inclusion. We're talking about peer review, we're talking about peer discussions and so on. AFI is pretty much working on that. SPTF is pretty much working on consumer protection for financial services. So this is a very general question. How about leveraging on other resources and other initiatives?
Hannah, are there relationships with those organizations, with AFI and STPF? SPTF. And others?
AFI, definitely yes. We do a number of joint initiatives, particularly where it sort of crosses between banking and insurance. Because AFI their membership is made up of mainly central bankers. Some of them also supervise the insurance sector in their country, but that's actually the vast minority. The majority are actually just focused more on the banking side. But we have done a number of actually recent joint initiatives with them. The other one you mentioned, I'm actually not so familiar with, so I'd be interested to know more about them. Because we certainly, there are a lot of other partners in the room here who we do work with very closely and leverage off, and that's how we achieve what we can with a very small team. So, yeah, no, thank you.
Let's come back to Henny for a second, okay? And thinking about if the role goes beyond inclusive insurance, because certainly in many of the jurisdictions that I've seen, it's not just an inclusive insurance issue for capacity building. There are bigger issues and managing those kinds of things. Anybody else have something along those lines in terms of the evolution of A2II? Is this related?
Yes,
Andrea?
it's about
Yeah?
the capacity building, like in general.
Okay, in general.
I think that for the, sorry, this is working. I have seen, like in several places, that for instance the World Bank is supporting like general capacity building for supervisory authorities, but then there is obviously this focus on inclusive insurance because of the nature of the country, of the nature of the market that they deliver. So I honestly think that it's very important that you really work together with the A2II in order to ensure that this capacity building that is broader and that Henny was referring to is enhanced and you ensure an alignment. So that's one thing. And maybe coming back to Elia's point about no more papers and so on. I think that there is a huge disparity of supervisory authorities in terms of like knowledge of the basic rules of proportionality. I work a lot with the Spanish-speaking supervisors and French-speaking supervisors, and they do not have access to these papers. They cannot understand what the basic papers of the ISA. That's general, like maybe in Kenya, in Uganda, are papers that are very like popular and people cannot understand. But for them, they don't have access to them. So it's like a very simple request. I think that is very important to promote access to these tools in different languages. That will really help supervisory authorities in Latin America and in some countries in Africa to cope with this gap.
Maybe in different languages, but also in different modalities, not just the paper, but certainly online, of course, but maybe videos, maybe other things that would get to people more effectively, and then some kind of an easy mechanism to direct people to those when they need them. Because I think that's the timing issue is also really a critical issue. We had, back here, then Yoshi.
Well, just to continue that one, I think to come to this issue of 24 countries which are still doing regulation, 48 have done. What we find is the amount of man hours or person hours that's gone into it. What I found in SADC, they have a concept where they have model laws.
Model laws.
Yeah.
That's SADC.
So what A2II could do is have model regulations. Even though the Philippines one was kind of being put down, I found Philippines have done quite a bit, even in disaster risk reduction. And they've come up with some basic, a law which is working very well. So what would happen is a model law was proposed. And what I will do for my jurisdiction is to take that law and then panel beat it and, to what I require. So in essence, maybe A2I can come up with model regulations on different aspects, and allow other, different regulations or different entities to use them accordingly. So it will save a lot of time, and we won't have cut and paste, but we can then.
Right, but at least you've got something. For me, I always find it easier to work on fixing something than to looking at that blank screen. So I definitely agree. And I saw a very happy smile from, no, not a happy smile from Tim. Okay, not a happy smile.
I'm about to retire from many, many years in this game, and I have never seen a model law that didn't result in cut and paste.
The voice of reality.
Okay, when you have jurisdictions that have very, very similar regulatory infrastructure, there's easier borrowing, and it's much easier. In the 50 American states, we have model laws on things like the commerce, contracting. But that's a very specific situation where there are 50 states with absolutely very similar regulatory traditions and so forth. And maybe in SADC you can make it work, but I think the risk is greater than the opportunity. And for an organization like A2II, I think that's it's implicitly sending a message that I don't think we want to send.
Tim, are there things that could be in that are critical components that must always be there? So maybe even a checklist at least.
Checklists, very, very different story. And if you present it as a checklist and you also start by calling the regulator's attention to the fact that they're not writing on a blank slate, there's something already there. And one of the problems with cut and paste is you adopt the Philippines law wholesale, with a search and replace, and you forget the fact that the Philippine law refers to these other pieces of Philippine legislation that don't exist in your country, or you don't know that in your country there are all of these pieces of legislation that will suddenly be in conflict with the provisions of the model law. So the checklist says, make sure these things are covered either in the new piece of regulation that you're designing or adequately covered in existing regulation.
Okay. And also, when we're talking about regulations, right, we're talking about the whole array of regulatory tools. Okay, good. Yoshi, thank you for your patience.
Just to follow what Henny mentioned about capacity building issue. And one area that's so obvious for everybody, developing country, emerging market situation, one area is so obvious that in the future it's a huge gap in the regulatory field, as we discussed, is data scientists. How do we monitor this AI or new technology issue, which will be an extremely big gap for regulators. It's so obvious. So, of course, we don't have a we cannot build up data scientists ourselves, but at least some mechanism that we learn basic principle of AI or something. We have to create some mechanism that the regulators can learn, developing countries, emerging markets, as soon as possible. That would be a huge, huge issue in the future.
We know this is coming.
Yeah.
Right? So maybe we start working on these things now and start figuring out how to deal with them now so that when they're there, when they're stronger, then we've got that. Maybe we're looking at sample hierarchical structures or organizational structures so that you can get an idea of what kinds of skill sets you might need. Please.
And it's not, it does not demand of member states to participate. And it is informed with the intention to allow insurers when they trade amongst the set of countries to have a general guide that the provisions must read more or less similarly. So it's not a model law where you just put in your country's name in to that extent. It's almost a guideline document, and it's really premised for the insurance, when it's premised on the IIS principles. And it just aligned it to the international standard and aids member states to make sure that when an insurer goes from Namibia to Zambia, then what it faces in the provision reads more or less the same. But it does not take away the obligation to ensure that that law is, of course, fit for country. That's one. On the building an A2I's agenda going forward. Because I think in our last conversation, if A2I has to sit back and look at the past and what they have accomplished in trying to drive the inclusion agenda, the question is what else is left to do? Because when we make a study, we do an audit of how many countries have a microinsurance law. I can tell you confidently, almost all the study countries have a microinsurance law. What else do we need to do in that space as regulators? If there is nothing else or not much else to do, the question is what should we do in the area other than, of course, capacity building is critical. There are forms that it takes shape right now. The question is just how do you do it, not just collaboratively, but to do it in a manner that fosters collaboration and synchronization across countries. Whether it is the use of sandboxes, somebody made that statement, I must now read, and I told you read what the Philippines is doing or Singapore is doing or Cuba is doing. There's no depository to that effect. So I think that could be some of the stuff that they could focus on going forward. In terms of inclusive insurance, that's how they started. Is it what they must focus on going forward? A case I think must be made, given the history and what they've done already. And the issue of papers. Papers are very important. They serve a particular purpose. But if we just write them, nobody reads. Because there's really, as a regulator, I don't know how much else I can read to try and keep up. So how else do we disseminate that information? They do the webinars that are fantastic. There are other shorter methods other than papers. Because if you read A2II's wonderful material, IIS wonderful application papers, you will just read them.
Mm-hmm. So we need different. That's not so bad, is it? No. So we need better methods of conveying the knowledge. Different. Well, if nobody reads, then yeah, different. At least different. Different, more appropriate. Okay. There's one more quick thing that I wanted to address. We talked the last day and a half about these issues of the siloed regulators. Is there a role for A2II in helping to bridge those silos? This is maybe more of a national policy issue, as I think maybe Jonathan said before. Maybe this is a national policy level. Is there a role for A2II to start looking at that level also? No. Very emphatic no. Why?
I think it is definitely it is a role of the government basically. Government who actually who is actually the appointer of different regulators. I think it's clearly the role of the government. For example, in Pakistan, SECP is the regulator of the capital markets and insurance. Central bank is the banking for the banking sector. Pakistan Telecommunication Authority is on the communication side. So there are two ministries involved. So I think it is only the Prime Minister level who can coordinate between these two things.
So is that a place where A2II should be going?
I think not at all. I think.
And yes, I agree with you that it's the role of the government, but regulating is the role of the regulators too, and A2II has a clear role there, right? So, yeah, Tim.
So I don't think it's A2II. I would agree with our colleague from Pakistan that A2II's role is not to foment intergovernmental conversation in Pakistan. However, we're also seeing emerging in the interests and jurisdiction of the standard setting bodies. And IAIS is not alone in this sphere. There is a standard setter for banking, and there is a standard setter for payments, and there's a standard setter for security. And we are seeing an acknowledgement on the part of the standard settings that technology is driving this convergence in their spheres of interest, and that there are increasing numbers of issues on they're going to be giving inconsistent guidance to you, the country level regulator, unless they are joining up and considering all these phenomena jointly. And I'm pleased to say that A2II does have a seat at that table. It's a kind of a support seat to IAIS at that table, but it's a very important one, and I encourage you to make the use of it.
Okay, good. Oh, Jonathan, did you?
Yeah, I think just on this point, I do believe the role of A2II and also supporting the IIS in the job of advocacy around public policy is going to continue to be very important, particularly in this new world that we're moving into. And I do think the fact that the SDGs don't, use the word insurance once is in a way a failure of effective advocacy, that perhaps the people who are developing the SDGs, the policymakers, don't sufficiently understand that insurance is a critical part of a solution to many of these sustainable development challenges. So that's a long way of saying my personal view is there continues to be an important advocacy role.
Excellent. Okay. And Yoshi, I think you'll get the last word.
Yeah, just following what Jonathan said, just I really feel that, first of all, insurance regulators, A2II, should be well informed what's going on. Like Kenya's example, Members, central bank oversee this Members' activity, and I'm sure that you closely collaborate with central bank or some if it's insurance-related matter. So those facts, all regulators should be well understood. And China, China is a huge sandbox as a country, and how they regulate those stuff, we have to be well informed. And we just, just which regulator collaborate with which. And of course, it's a bottom line is a central government decides whatever, but insurance regulators should be well informed so that we have a say to the government policy making. So definitely A2II should continue to be advocate and also exchange of information.
Okay. Okay, good. And and in China, the result of all this is that by the end of this year, mere months away, there will be no more poverty there. So I think the whole role of inclusive insurance will change with no poverty in China. This is a really exciting time, actually, I think, for regulators looking at the future, what's coming, how you can have a very positive impact in helping to make inclusive insurance happen within these opportunities that are coming. And I think this is a super important role for all of you, and I wish you great luck. Thank you all. And Brandon, thank you.
Thank you so much, Michael. That was a very, very interesting and, work compiling session for us. So basically at the next Governing Council meeting in December, when we review the work plan, we can blame the work plan on Michael, and it won't be our fault anymore. So that brings us almost to the end of our A2II 10-year anniversary conference. Before I hand over the word to Hannah and Peter, it's been a real pleasure for me to guide you through these 2 days. I had a lot of fun and learned a lot, and thought it was very interesting to hear from all of you. We've talked a lot about sustainability. We're a sustainable organization. So if on your way out you would drop your name badges here so that we don't have all the plastic ending up in the garbage but can be reused, we'd appreciate that. So with that, I'll hand over to Peter and Hannah, and our first Hannah. And thanks again for it.
Well, I'd like to start by just thanking everyone here for your contributions over the last 2 days. And I hope you've all enjoyed this as much as I have. It's been very rich discussions. So I'm not going to try and sort of cover everything that we've discussed now, But I'm going to share with you just my 5, I'd say, main takeaways from the last 2 days. So the first one is really, this is sort of takeaways for supervisors' inclusive insurance regulation. So my first one is the importance of policymaker engagement and stakeholder engagement sort of more broadly. So here it is making sure that the SDGs don't just need to sort of apply to insurance, and insurance is relevant, but actually that insurance is stated within these types of policy documents as really being a key solution, and it's better recognised. I also think the importance of sort of more stakeholder relationships, so insurance supervisors forging relationships in their jurisdictions with the relevant authorities now also involved in issues involving financial inclusion. So be the agricultural sort of authorities, be it the telecommunications authorities. I think the insurance supervisors have a really key role to play here. Then the second sort of key takeaway was actually just the ex-ante benefits of insurance. And there's nothing, new about this, but it certainly came up a few times in the discussions. So it's just making sure that not the only benefit of insurance is not actually just the claims payout, but it's actually everything else that comes with having that insurance policy. Be it some sort of dial a doctor line or something that maybe comes in addition to the policy itself, or just be it that comfort that people get from actually having the insurance policy in the first place. My third sort of key takeaway is that we need to do a better job of data collection and also measuring impact. And I think we had a very good discussion this morning, which can give some ideas of how to go about this. But sort of what framework should we use to measure the value of insurance against? Should we be looking at the Sustainable Development Goals? That came up as a suggestion this morning. How do we measure client value? But how do we make sure this is all done in a very practical way that's simple, doesn't put an additional burden on the industry who already are probably serving the low-income marketer at a lower cost? And do we need to use sort of formal reporting to do this, or could we maybe just do this through surveys with smaller groups of the industry or stakeholders instead? My fourth key takeaway was the importance of different market contexts and the need for this to be understood in the approach that's taken. So here you need to look at the different stage of market developments. Again, it came up a few times, the importance of just not copying and paste what's been done in one market and applying it to another, but really looking at the market context and seeing whether something is suitable. And you need to look at things like culture here, what's the culture in the markets, and then also in terms of what the supervisor's regulatory objectives are they in a position, do they have a market development mandate? Are they in a position to really be able to drive the change in the same way as another country? Do they have common law? Do they have civil law? What is the flexibilities that are actually around, are given sort of to the supervisor? And then my final sort of key takeaway is that there is, a lot of collective knowledge available, and we should all work together collaboratively, big word, and leverage off it. And this is peer exchange. It's also, as I think Craig was saying, these 24 countries that have now implemented inclusive insurance regulations. We should be actually learning from what they've done, and this should be shared. And so we can benefit going forward to the next 24 who are in the process of finalising their regulations, don't make some of the same mistakes that have been made before. So those are my sort of 5 key takeaways. And then I also just wanted to conclude with, I think, maybe it's a little bit strong, but the 2 reasons I could say I love, or I certainly enjoy, my day job. The first of these would be that I think insurance is a really important and empowering tool, that it provides people with protection, it gives them the ability to sort of do business and other things they wouldn't be able to otherwise. And I think what we're doing in order to try and make more of this be available to low-income people is for me, it's very inspiring and very motivating. So that's the first reason I like my job. And then the second comes down to the A2I and the team. And here it's not that just, we will always look young as long as we work with the A2II. I think that's great. I think the team prove it. If you actually ask us, most of us our ages, you'll probably be surprised. And also just the innovative energy that we have as a 10-year-old organisation. But I'd moreover just say the people in the team. It's a really great team. They're really excellent to work with, and it makes it enjoyable going into the office each day. And on that, so I'd just like to thank the team as well for organising and helping support and organising this event. And I'm not going to single out people because I really do feel it's been a real team effort, but you've seen sort of visually probably around who's maybe been a little bit more involved than others, but it really has been everybody at some point. So yeah, thank you for your attention. I hope you've enjoyed it, and I certainly have.
So just a very few concluding remarks from my side. I would really, on behalf of the A2I, thank all of you that, for having joined us here at this conference and birthday party at the occasion of our 10 years anniversary. With its lively session, the conference has provided a unique opportunity to share information, discuss topical issues, and learn from experiences, the good ones and the less good ones. And a big thank you to all moderators, panelists, and active participants around here. During yesterday's birthday party, we have had the chance to meet again our old friends. You know, they're still looking very young. Since they were engaged in financial inclusion, of course. And what I could feel yesterday night was the spirit of the big A2I family, and this was a great experience again. We are very happy that the A2I has last year moved already into a third phase, and we are really working hard to make it even more sustainable because we know there is still so much to do. And we are very proud to be IIS's key implementation partner on financial inclusion and supervisory capacity building. And many thanks to all of those who have helped to progress the A2I towards where it stands today. And many thanks also from my side to Hannah and that whole team for arranging this here. We will take on board the valuable input that we have received during the conference. And all of us in the A2I can promise you remain fully committed to continue our good work and day by day and step by step move to what we have heard is our mission and our vision. So have a good time here, safe journey back, and I hope that we see you soon again. And this concludes our conference, and thanks again.